So the stock market bears may be still out there. However, we do need to talk about a certain bullish company out there that's called BigBear.ai. So again, very ironic that someone named a AI after a big bear, and very coincidental for the market, but we're going to be talking about it today. Could this be the next NVIDIA, AVGO, ASML, Intel even, right? Everyone's trying to beat NVIDIA at its own game, and NVIDIA just simply says, smile and wave, boys, smile and wave. Because the company is just absolutely doing insane. NVIDIA up at 180 post-market. At the time of recording this video, a nice little bounce right on the 50. But we're not going to spend this video talking about NVIDIA. We're going to be talking about a BBAI, or Big Bear AI for short. This company, when originally I heard about it, I was like really skeptical about how it was all going to play out for the sole reason. We see so many penny stocks that come around, and anything under a $10, I'm basically considering a penny stock because they can be manipulated to all living hell. However, once I actually took a look at this company, it was very, very interesting. Because if you go back to where it IPO'd at approximately $9. It's trading about $8.51 right now. So why is this important? You usually have the IPO, you have the crash and burn phase, and then you have the leveling off phase, right? So this company leveled off around roughly $1, $2, $3. And then it had that initial like kind of pump and dump where they pumped it and they dumped it, right back, but not to the low that we had previously. So again, this is happening over multiple years where companies like this start to come out of their infancy, kind of into their adolescence, as we could say. And now we're actually starting to get more structure around it. What am I saying that structure? We're trading above the 200-day moving average. We're holding between the 50 and the 200, not breaking the 200, and actually finding support around it. So it's looking like a more structured trade out here. We're going to determine, hey, is this company expensive right now, or is it cheap in comparison? What I like about it and what I don't like about it. So let's start what I like about it. That it's trading with fundamental technicals, where you're looking at the 50-day moving average, is breaking and bouncing off of it. So for example, broke the 50 on catalyzed earnings, came back above the 50, found support on the 50. So all these areas, I'm like, okay, this is a nice kind of push right here. Could we be flagging out? That's a natural question that we're establishing. Are we going to go to new all-time highs and then reinvigorate with this company? Are we going to break above $10? Is it going to be the threshold ceiling previously that it was at? And are we going to break above it? Now, their last earnings was complete crap. Their next earnings is approximately November 5th. So again, keep an eye on this one. Probably put on your watch list. Would I buy it right now? No, I would like to see what it does around the 50-day moving average. And with the indexes doing what they've been doing, which is just pushing higher and higher, and we actually got a buy signal. But if we run this through Lux Algo, what does it actually tell us, right? So looking at this, just initial thoughts, I'm seeing green, which is a good sign. This is the daily chart, and we'll talk about the weekly in just a second. So you had a lot of selling going into this. Again, that was post their earnings. Big momentum players selling off. But ever since that pivot, we really had a nice push, forming support around that $6.54, hitting a bit of a resistance wall right now. So the thing right now, if you buy in, there is a risk. The risk is that the RSI crosses over and we start curling down lower. However, we've been in a very long bullish trend, and we look at the weekly, this will tell us a more clear picture. The bullish trend's still intact, but they're still selling. So it's a fight between the two armies. We're getting into that overbought territory, but really, let's say the 4 hour, see what it's saying. Now, again, we kind of sold off, forming a base here, and I do think this is going to be a base that could be broken out if you have any catalyzed news to the upside. So simply put, between this point and this point, which is $8 to $7, I would be a buyer, maybe setting up a position, setting up like majority of my position at 7.5, and then dollar cost averaging down if we come down there, knowing if we break $6.54, that is a get out of Dodge. We're breaking structure. We're going back down. And again, that $6.28 is where the 50-day moving average is. The real discount is going to be at 5, but we don't want to go back there because then we're just ranging sideways. And this is not a company necessarily you want to hold without seeing that structure progress. Again, what I like about it is that it went through that stupid phase that all IPOs go through. And what I've criticized a lot of companies and saying like, hey, this is just horrible crap. And everyone's like, no, we're going to buy it and hold it. And then they come and complain to me that the thing fell off a cliff. And I'm like, For example, like I know we post to Rumble a lot, but their stock is going through that phase where I'm like, I don't want to be a shareholder, right? I held Rumble shares, and right now they've just been ranging ever since they got that pump and dump phase, right? So you have that IPO phase that we talked about, we have the dump, we have the push back up, and then we have the sideways ranging right now. So with Bear.io right now, they're going through kind of that already, but you have all the good stuff right now. You have all the stuff that it truly could break out. If it breaks above this $10 range, yeah, this would be an insane play. It could be a pump and dump. Again, putting that out there, but I do like the volume, right? We're seeing volume stabilization on the lows, volumes coming in on the low that we formed here, volumes coming in as well. So again, there's a lot of bad companies out there, and I'm basically telling you guys I've done 36% this year on my portfolio by picking the companies that need to be picked. For example, like Palantir, Meta, Microsoft, Google. Everyone's like, yeah, but you could just buy them. Well, you didn't buy them. You're not up 36%. So maybe listen to the guy that actually is, not trying to toot my own horn, but I want to save you guys your money, right? Why would I put you or tell you to go look at this company if there wasn't something there? And I'm saying something there, right? I'm seeing, and I'd be even investing in BBAI, put a couple $100 in just to see what it does. I would not put my life fortune there. Again, not financial advice, but I am looking at it in the monotony of companies that people bring to this channel and talk about. It is looking like it's promising, right? And the holdings, again, their earnings were absolute crap, but again, you're not really expecting this company to have a lot of good earnings. Really want to see what the news is about, right? Degrade on seeking off all the metrics are going to be essentially like absolute crap, right? But the news is what the thing that drives companies like this. And we can see that Goldman Sachs, 30 signs of froth, talking about probably citing this company in here. Big files a mix of scrutiny, security shelf. So basically, is right. Statement contains a bunch of crap, right? But again, BigBear.ai tanks on earnings. Analysts remain high on long-term opportunity. That scares me a little bit just because analysts are usually wrong. And then we can see BigBear.ai targets 125 to 140 revenue amid historic government AI funding and record cash position. So that's pretty good that they're holding a cash position, but that was as of August. So we're going to have to see how they're deploying this cash, how they're leveraging it up on their next earnings. And it could be a very interesting surprise out there. So where would I be like the stopgap? 650 would be the stopgap. You're blowing through the previous structure right around that $7.20 consistently, like you're just blowing through it. And right now, post-market, you're at $7.82 roughly, I believe. Yeah. So correction, $8.51. So we're just setting up to be in this nice little territory that this could be a very interesting play. Wouldn't go absolutely crazy with it. The risk on mentality in the market, again, with the VIX holding above 20 is still there, so there's not a lot of risk. But Powell's pivot recently that we'll be covering and talk about the jobs numbers prep for tomorrow. Make sure you guys are subscribed to that so you know exactly what's going to be happening this week with the job numbers, and we actually may get them on Friday, which is a very big surprise considering the government is set to still be shut down and no end in sight. Manufacturing expected around 35 and 52 for non-farm and private. We don't have manufacturing payrolls out, but I'm sure it's going to be a negative. And the whole toss-up with the government shutdown, is Trump able to fire people? Throw in the comment section below what you think. And also, what do you think of Bear.ai? Do you think it's a buy? Do you think it's a sell? Do you think it's something that keep on the watch list? Throw it down. I'm really curious to see your thoughts on it. I personally think that this company could be something that leads to further upside, but be very, very careful because it is a volatile stock. And if you guys want more information about stocks, check out the latest 2 videos we posted here in the Discord on the top left. Thank you all so much for watching, and I'll see you in the next one.